Hello, can everyone hear me or see me? Yes.
Yep.
Yep. Okay.
Or, well, I can hear you.
Sorry, I'm just trying to. I'm doing this on my phone because I didn't want you to all wait. Wait. Someone says you can't see me. Ah, thank you, Andrew. Sorry, I'm just trying to update this on my iPad because I can't really do the meeting without the iPad, and it's saying I have to update. Saying I need to update my app, so my apologies for taking this time to do this. Okay. Okay, 1 second. I'm just gonna log in with my computer. So you're gonna see the ceiling of my house here. I'm gonna log in here and see if I can't rescue this late starting class. Oh, who's got the cool dog? Karen must, because she just. Okay. Okay. Close this. Some fridge. Okay. Yes, everyone can see me? Okay. So I want to look at, so just like every lecture, what I want to do here first is I want to go over the things I've been thinking about in the news. The thing I've been thinking about here. So I started, actually, let me start off first with just a few updates. So Bloomberg is basically all set up. Everything is installed. We are just waiting for 4 days for Bloomberg just to, because every university has the same problem we have, which is everyone is virtual. They had to set up a whole new system for how do you have students virtually access Bloomberg terminals. So they created a new system. Apparently that system is not finished yet, but it's supposed to be finished on Monday. So I'm going to make I have a subpage that I'm making on Laulima, and you'll be able to see instructions on how to do it, how to sign up for it, how to start the Bloomberg market concepts training, how you can then start all the work on it. But then again, we have students in this class that are also paid to help you do it as well. So you should be able to take care of it that way. Okay, so. I'm going to show you some things I emailed myself. So, and everyone can see this, someone give a thumbs up, yes? Yep, okay. So I took these screenshots from Bloomberg just today. So the things I've been thinking about today, so if you look at this, if you were to look at this portfolio, what should be interesting to you is first who the owner is, which would be Federal Reserve Bank of New York. That would be District 1 in the Federal Reserve System. But more importantly than that you have nearly $9 billion in holdings by the Federal Reserve in corporate bond ETFs, corporate bond funds. It's the first time it's ever happened. It's the first time ever that the Federal Reserve has held something other than U.S. Treasuries. And I'll post these all to the agenda for the week. So anything I kind of post like this, obviously I'm posting the video, but I'll also post these pictures. If you look at these funds like iShares, investment grade corporate bonds, Vanguard short-term corporate bonds, okay, you wouldn't think too much of that. But what about things like this? X-Trackers, high yield corporate bonds. That would mean you're starting to get into junk status. Or you've got the Van Eck Vectors Fallen Angel high yield funds. That would mean Fallen Angels is what you refer to a bond when it's issued at investment grade, but then the business deteriorates after that and it's no longer investment grade. Now, let's go to the next one. This is for that top fund that was listed, the iShares investment grade fund. Look at that. The Federal Reserve Bank is the second largest holder of that investment fund. But the Federal Reserve Bank of New York owns nearly 4.5% of all outstanding shares of that fund. Right? Bank of America is higher. Bank of America being the investment bank, Prudential, the insurance company being the third largest. That's pretty significant, considering the fact that the Federal Reserve Bank didn't actually purchase these shares until the middle of May. So they only started doing this in the middle of May, and they basically stopped doing this in the middle of June. Now let's look at this. This is the ticker symbol for that fund, LQD, which stands for liquidity. So look at what happened here, right? So this is over a 5-year basis, right? Shares are plugging along, then the pandemic occurs, falls down dramatically. The only reason why it goes up dramatically is because you've got the involvement of the Federal Reserve that's basically rescuing that fund, right? Getting involved, buying that fund. That's just the fund has never done better. Now let's look at the opposite. So the fund I was just showing you was the corporate investment grade fund. So that would mean like, I don't know, bonds offered by like Johnson and Johnson, or bonds offered by Procter and Gamble, or by Coca-Cola, or AT&T, right? Big companies with very strong balance sheets that certainly could more than carry out paying for this. So what about these, the fallen angels? So this is an ETF, an exchange traded fund, and it's below investment grade corporate bonds. So this would be basically junkier things, right? So look at this. So here's our kind of our overlay of what the fund does with, right, all of the recovery occurring primarily because of the involvement of the Federal Reserve. And if we look at that fund, this pretty bad looking investment, the Federal Reserve Bank is actually the 9th largest holder, holding over 1% of all the shares outstanding. The ones above it are actually, some of these are hedge funds. So that's the kind of space that they're getting involved in. And if we take this out a little bit further, I'm sorry, one second. I'm sorry, Chairman. No, I cannot. It's not on the iPad. Yes, it's on that. It's not on the iPad. Sorry, everybody. Chairman, I have to get back to work.
So all I can download it on is on the other phone?
Yes, that's correct. Well, why don't you give it to me and I will multitask, okay? You are not giving this lecture. Okay, so you want to give this lecture? Do you want to explain that graph?
Mm-hmm.
What direction is it going, up or down?
Going up.
Yes. And is that a good thing, you think, or a bad thing?
I think it is a bad thing, because it's just like COVID. Because COVID cases are getting higher.
It is not a good thing, yes. So give me your yellow phone and I will get back to teaching. Okay, so the involvement of the Federal Reserve in those corporate bond funds is only one thing. So look at this picture. This is the mortgage-backed securities, a space that the Federal Reserve has already been involved in. But what we see here is that the involvement of the Federal Reserve in mortgage-backed securities is now greater than it's ever been, even bigger than it was during the last financial crisis, now reaching nearly $2 trillion in holdings. That reflects almost 30% of the mortgage-backed securities market. That's huge. I don't know what else to say really beyond that. And the final picture, as I kind of set up what the space looks like for markets, would be this picture. So, determine what is it? Okay. So what we see here is that here's the story that's been set up so far, is that the Federal Reserve is the second largest holder of the of ticker symbol LQD. That would be the investment grade corporate bonds. That's a $54 billion fund. It's the second largest holder of the Vanguard short-term corporate bonds fund, the fifth largest holder of the intermediate term corporate bond fund. It owns the Fallen Angels Fund. And this really all began May 12th, was when it started buying all of these funds. No one wants to hear you singing. Well, maybe Jasmine wants to. Michael wants to, but I certainly do not want to. But what becomes significant as we try to understand the market, right? Because the theme I keep hearing about here is, why is the stock market doing so well when all of the conditions surrounding it seem to be so bad, right? That would seem to be kind of one of the conundrums, which, why am I talking about this for this course would be, that's the job of an analyst. That would be the job of what someone who successfully passes this course and other courses would be able to analyze investments, equities and bonds, and say, does that make sense? And what I'm trying to say to you is that in my informal sense, it doesn't make sense. And the way that I can say that it doesn't make sense is I can look at these PE ratios. So to set this up here, let me give you some figures here. So every earnings, with every earnings sector, every earnings announcements, right now we're just on the heat on finishing up second quarter. That would mean June 30th, the quarter that ended on June 30th. All but 4 companies have announced their earnings. And at this point, 94% of tech companies have beat the analyst projections. That's the high point. So the tech companies are beating projections. The low point is the real estate sector, where only 61% of the real estate firms beat analyst projections. Now, overall, 84% of all companies, 84% beat the projections that analysts had made for what their earnings would be. It's never been higher than that. So the historical average is 72% of companies beat analyst projection. And right now it's at 84%. This is the highest it's ever been. So how can that, so I guess put this in perspective. Right now, earnings of companies are down 32%, 1/3, which shouldn't be surprising because companies have basically shut down. Things are largely being curtailed right now. So earnings are down 32%. So analysts adjust their projections downward. Yet companies are now beating those revised downwards analyst projections. When January started, the estimate was that the earnings per share, so earnings per share, EPS, what that statistic tells us is it's the total amount of profit divided by the shares of common stock that were issued. So profit divided by shares of stock issued. At the beginning of the year, in January of 2020, the estimate was that earnings per share overall was going to be $178 basically. Today, that figure is $132 for the earnings per share. So basically, companies are expected to be earning less. Their profit is expected to be less, right? If you think of it as a ratio, profit being on the top side of that ratio in the numerator, and the denominator being shares issued. Shares issued probably isn't changing much, meaning the denominator is not changing much. It's the numerator that's changing, right? The profit. So if it's falling from $178 to $132, it's not because companies are issuing lots of shares. It's probably because the numerator profit is falling dramatically. Does that make sense, everyone? Give me a thumbs down if that short little explanation didn't make sense of what EPS is. You're certainly more than, I'm trying to look at everyone's fingers. Okay. Say something, raise your hand, or do something if that doesn't make sense. So earnings per share are down, largely because profit is down. Yet, how can earnings per share be down? Yet, if you look at share prices, share prices are basically what they were before the pandemic occurred, right? That's the conundrum that I have to keep thinking through. Take this a step further. Earnings per share is used to calculate the PE ratio. So what the PE ratio is, PE ratio, a term many of you have heard of before, that would be the share price relative to the EPS, the earnings per share. So think of it as another ratio. Share price now being in the numerator, earnings per share being in the denominator. Well, that would mean if the earnings per share, the EPS, is getting smaller, and the share price is now just as strong, it would make sense to you, this picture, right? Because, right, if PE ratio is a ratio of share price to EPS, earnings per share, and I just told you that EPS is down, earnings per share is smaller, meaning the denominator is smaller. If the numerator is just as large as it used to be, that would mean that the PE ratio, which is the whole number of that ratio, is now larger than it used to be. In fact, so look at this spread out over 20 years. It's as large as it was during the tech bubble. It's as large as you youngins. It's as large as it's ever been in all y'all's lifetime. So for those of you who had me for class in the spring semester, and I was already saying to you that the PE ratios are already very large, now they're even larger than they were. In fact, they've almost never been this large, right? And this now dates back to the beginning of my investment experience. This is about the beginning of when I started investing. So I'm not buying much because it really doesn't make a lot of sense what things are being priced at right now, right? And I'm not even talking about the extremes of things like the airline industry, where they're not expecting even a near resumption of business until 2024, yet Southwest is selling for 38 a share, even though it was selling for mid 50s probably in February. I think as high as like 58 in early January. That doesn't, I mean, yeah, 37 is less than 58, but it certainly doesn't reflect a business that's not going to make any money for 4 years. That's what I'm trying to say here. That if this is what the PE ratio looks like, I don't know what I as an investor would necessarily do, because what sense do we make of this? So the sense we made of this, what the narrative was, everyone can see my arrow here, right? When I do it on the screen here, yeah. The story that we told here back in 2000 was that the tech, right, because it was a tech bubble, we could say things are different, right? We could say technology is reducing costs and now firms are going to be able to be more profitable. The story that's being told here is that interest rates are so low, and the Federal Reserve is committed to them being so low that it makes sense that things, that businesses are going to have really, really low costs now of borrowing money and making investments. But what happens if they're not, right? So the Federal Reserve does have a lot of control over interest rates. Yeah, it doesn't determine the interest rates. And the only thing it can do now to suppress the interest rate is get involved in capital markets in a way it's never gotten involved, such as, for instance, getting involved in mortgage-backed securities, making mortgages super, super cheap, or getting involved in the money markets. Like, again, if you're trying to make an investment even in a CD or borrow money for a car, you would all know interest rates are incredibly historically low. So what happens though if they're not? Where do investors go? I'm not sure you'd want to go into stocks, because stocks at this point are very, very pricey. They've never been pricier. So the only problem we have right now as we try to understand this is, so wait, let me plug in my laptop here. I can see I'm going to start doing that for 1 second here. Do you need help with any kind? You can see your sound over there. You okay? Is your thing downloaded correctly? Why not?
It's not really fun anymore.
It's not what?
It's not really fun anymore because when I'm creative, I can't get anything. I can't hit the dot so I can get anything. And also, I don't know how to move that well.
How did you used to open it? Did you used to open it on the yellow tablet?
Yeah, it used to be good on the yellow tablet, but that one time it didn't let me do anything. It just let me stand there. Now I'm bored. I really want to play this.
Okay, well, I can try to help you after my class is done, okay? Well, we only meet once a week, so every student is asking the same question you're asking. When will Scheiding stop talking? So, which is probably never. Okay. Okay, I am back. So I live in Manila, and every day I take my youngest son to Safeway. He and I go get a cookie. Sometimes Truman's fallen asleep by then, so he doesn't usually get the cookie. But go to Safeway, we get a cookie, and in this like empty parking lot, because at this point it's like 9 p.m., 10 p.m. In the parking lot, there's always this guy standing outside of his car talking about investments he's making on Robinhood, right? So he's like yelling and, like, I don't know who he's talking to, but it sounds like he's talking to a friend or a chat group or something. And he's talking about the investments he's making or what things are selling for. And I know some of you even have talked about like, Robinhood and, investing in things that way. And, um, if you look at the volume by retail investors right now, I'm not sure if I can, just going to do a quick little search here. If I was on the Bloomberg terminal here, Bill, I mean, this is a very simple search, obviously, because I just typed it into Google, so it's obviously not going to be. So look at that. Retail trade, I mean, I'm just looking at the news, so just very simple here. Retail traders, 25% of the volume, 25% of the activity. That's unheard of. What that means, retail investors, that would be like you or I or the guy in the Safeway parking lot, making their decisions of what they're going to buy. And I'm not trying to denigrate anyone's knowledge of the markets, but the problem would be is that retail investors obviously have less experience in the markets, and so they're more likely to be buying and selling things that are fads, buying and selling things without doing a proper analysis, right? Going on a gut, saying like, oh my God, everyone's using Zoom, right? All my meetings are in Zoom, so why don't I buy Zoom, right? Or I go to Starbucks every day. Why don't I buy Starbucks, right? Nothing wrong, right? When you're teaching a child how to invest with that kind of mentality, right? That kind of framework. I'm not trying to denigrate, right, your Robinhood portfolio, which might contain, I don't know, Disney or stocks that are that one would be very, very familiar with. But what does it look like if you say I'm familiar with Disney, as opposed to what share of the revenue comes from amusement parks? What portion comes from streaming? What portion comes from their involvement in other ventures that are unrelated to entertainment, such as owning ESPN, owning ABC, right? Like, even owning a portion of Hulu, right? Understanding that all takes a level of analysis, I think, beyond what they're engaged in. Which is why then the professionals then when they're looking at this, look at that. I mean, and I'm looking at this article for the first time as you are here. I mean, look at that. I mean, it's just turnover, right? So this would be individuals buying a stock and selling a stock. So turnover is 30 times what it was in 2019. That's a typical retail investor strategy, right? Buy a stock, sell it 2 days later when they made some money, or even sell it a month from now, right? Whereas institutions are going to be buying things for a very long time. And as the article points out here, this is from Bloomberg, is that small-time investors are having a great run at stock picking. And like myself here, I guess I'd be then qualified as a person who is a market watcher, would be the retail investors keep pouring in. And I don't know where they're getting their money from, but they keep going in and they keep bidding up things to, I just think, unsustainable levels. And then there's a part of me that says, you know, I can't fight the market, right? I have to go with how I understand it. But I just can't get into it at this point because it's hard for me to understand what are retail investors seeing that I'm not seeing. And it's not just me, it's other people who invest for a living and have been doing it for decades who also don't see it. I'm not saying that me and those others can't be wrong. I mean, we can be. But now that my son left the room, right? I mean, this is just like a shit show of companies that like, I don't understand why American Airlines, which has such low liquidity right now, and is probably the most likely of the big airlines to go bankrupt, why the share price has doubled, right? Or why Carnival Cruise Lines, like who's taking a cruise anytime soon? Why has it gone up 75% since May 8th? Right? Norwegian Cruise Lines more than doubled. Why is this shit show of companies all doubling in price? Right? Or as this points out, and let me just do this very quickly before I actually get into my formal lecture, which I know we're already at 5:39, but you know, I don't want to.
Shady, could it be because all those people think that now's the time to buy stocks? Maybe they're thinking that, yeah, now's the time to buy stocks because those companies will recover and not only recover, but be worth more than they were pre-COVID.
Maybe. Well, look at this. So I actually haven't looked at this. Look at this. So Robintrack is the site I've always used to see what's going on in Robinhood. So Robintrack collects the data from Robinhood to show what everyone owns. Robinhood is no longer going to share it. That's pretty crazy. The significance of that, well, for one, would be those who are investors now can no longer see what everyone is doing. But what it also means is that Robinhood might be trying to hide something. So let's look at what Robinhood investors are holding. Ford, GE, Apple, Microsoft, American Airlines, Disney, Delta, Tesla, right? Carnival, GoPro, Aurora Cannabis is always one of the top ones. None of these are like, outside of Delta and Disney, Microsoft, and Apple, those four of the 10 actually have four of the top 10 actually have a strong balance sheet. The other 6 I wouldn't touch at all. And I can't imagine any reputable investor who's not trying to see yield would go into those things either. The only great thing about Ford, the number one holder, is look at the dividend yield on Ford. I'm not sure if it'll show us. in a world where where the interest rates are so low, Ford pays out a dividend of 9% almost, right? So basically people are putting their money into Robinhood, buying Ford, and even if they don't do anything, they're getting a 9% dividend, which is paid out in cash. Pretty simple investing, right? Until Ford slashes its dividend because it's no longer sustainable. Now, when that happens, I don't know. Or even GE, right? Which in this case slashed its dividend because it's so bad. But fortunately, just because this company is so unliked, even though it's got a strong brand name, I would suspect that's the reason why investors are in this. So that's what I've now taken up 43 minutes of your time here. But as a person who does analyze investments, does analyze stocks and bonds, that's the problem I've been having this past month, really. I mean, for the most part, this past month is it doesn't make sense to me. This picture doesn't make sense to me why it should look like that. Why stocks should be so pricey right now. Is it because people are just sitting around and they don't know what else to do with their time, so they're buying things? Is it because the alternative, which would be bonds, are paying so little right now, so I might as well get into stocks? Is it because my day job is no longer there, so I see all these commercials, and so maybe I should just do that? I really don't know what it is. I'm not saying don't get into stocks, it's not a great time, but I don't I don't know what there is as a way to as a reason to get into it right now. Like I just don't feel like I have to get into things right now, because things do seem pretty pricey right now when I look at it this way. So I don't know. Karen, weren't you saying that you were going to buy some stuff, or did you buy some stuff?
I have fractional shares or fractional shares in Tesla and Apple. But I wanted to ask you about how do you feel about Tesla? Like,
Yeah, it's funny. My wife has clients that are always,
because they just stock split this
yeah,
past month.
1 to 5, right?
So,
It's just one of those things. I don't know how it's the most valuable. Well, I mean, again, I probably focus too much on the maths of this, that I look at that PE ratio of 1200. That would mean that shareholders as a share price are paying $1,200 for every dollar of earnings. That's projecting a phenomenal growth. Compare that to Amazon, where the PE ratio is a tenth of that. Compare that even to Apple. Sorry, or compare that to Apple, which has a PE ratio of 40. Yeah, it's just it's crazy. I mean, I don't know. Maybe see. This is the thing where I seem like the dumb person for not getting involved in Tesla, and I mean, I probably own it indirectly as I would through different funds. But sorry, I'm just going to change this so I can hear better here. So I don't own Tesla directly. It's hard for me to, if I knew less, I probably would buy it. And I'm not saying that bad kind. I'm just saying, like, if I knew less and I just think, wow, Tesla's a really good company. They make a really high quality product, and it's certainly cutting edge, right? To have an electric car with such a long range over like a dirty gas burning car. I'd be like, gosh, and then I look at the share price. I'm like, wow, they're really doing well. And I'd be like, yeah, I'm gonna buy that. But maybe I know too much, right? Because then in this case, I look at the numbers and I just can't do it. It's just like putting all your money on red 51 on the roulette wheel and saying, I think I'm going to make it. I don't know. That's my sense of Tesla. And yet my wife's clients do very well by it. And my wife would even say, like, maybe you shouldn't buy it, but yet they still do it against her advice and they do really well. So it either makes her look bad, it makes me look bad. I don't know.
I wish I bought it like in March because it went down.
Even my wife's clients all say that, right? I should have bought it a year ago. Should have bought it 5 years ago. Should have bought it 10 years ago. Yeah.
That would have been crazy. Because it went from like 3 to
I'm
like
sorry. Go on.
grand or like 1,500, and I was like, what? Like that doesn't even make sense.
Well, that's what I'm saying. But even the share price doesn't make sense. What I'm saying is that as a person, as an investor, I always look at the PE ratio. What are investors paying as a share price for every dollar of future earnings? And again, for Apple, they're paying $40 for every dollar in earnings. That's strong growth. You're projecting very strong growth, right? Let's look at something where it's boring. A very big, large power company, $20 in share price per going forward. Let's try to get even more boring than that. This is a large water utility in California. That's way too strong. That'd be a bad investment. Maybe something like, I could look at Kodak. No, I'm not gonna look at that. All right, Coca-Cola. Right? Yeah, they get into some like interesting like new lines of business, but pretty much all the Coke drinkers are out there, right? I'm not going to convince people in mass to switch over from Pepsi to Coke, right? Or from water to Coke, right? The switching is very low. Really, the only way a company like Coke or Pepsi grow is by developing new lines of business, right? Like Coke did with Monster Energy drink, and then getting people to drink Monster Energy drinks, right? Or chilled juices or whatever they do, right? That's the way you get growth in those kinds of companies. So because Coke is such a low growth stock, that's why the PE ratio is so low. Now, Nike, on the other hand, right, has been able to do some things with, the thing that looks strong for Nike would be, well, after COVID ends, right, that they can sponsor college athletes, right? They get into other spaces within apparently their shoes. They got these like running shoes that are like illegal on some like tracks and some races because they're so good, I guess. And they have a very good retail network. They control their costs well. So investors are willing to pay more for it. As opposed to Puma, I was going to say, I can't imagine people are buying Puma shoes. Oh, let's look at Under Armour. Under Armour is much bigger into that space, but yet here after you'll notice here there's no P/E ratio listed, and that's because they don't have positive earnings after all deductions are taken out. So right? That would be a riskier investment, something like Under Armour as opposed to Nike. You know, I don't, so now we're at 52 after here, and I know I do actually still want to get into the lecture, but since I've been kind of bringing this out here over a long period of time, what kind of, and this isn't necessarily the topic for today's lecture, but if anything, here's what I'm hoping to get, are two things out of this. First thing would be, when we have Bloomberg up and running next week, you would be reaching out to Elijah, you'd be reaching out to Jasmine, and I'll be giving you their email addresses to be able to help you. They'll be getting kind of immersed into the Bloomberg system, but I'm hoping you will get immersed in it as well. You'll do the training, but I also hope you'll just play around with it. Doing the playing around with it like I did I started preparing for class at 3 p.m. Now I prepared a lecture before that, but the whole thing I did with the pictures I showed you basically in the beginning of this, I started doing that at 3 o'clock. I stopped doing it at 4:15. Right, and you can largely see there I used Bloomberg to do the discussion that I did for you. That's what I'm hoping it does for you. It gives you, again, the power to analyze things. And what this course does then is it helps you kind of work through those numbers to understand kind of what's going on. But then again, the second thing I'm hoping that this discussion does for you then is it shows what role an analyst has in understanding this all, right? So even if you're doing some very simple investing right now, I'm hoping it makes you at least take a step back, that you're probably not doing the same rigor of what you should be doing, right? Like right now, I mean, here's what I can say to you is right now I am not beating the market. But what I'm saying to you is I think the market's actually being crazy. And I think the rest of the professionals would also say the market's being crazy right now. It doesn't mean I'm going to be the victor. It doesn't mean I'm going to be the winner. Even though historically the professionals have been the winner, it doesn't mean I should be the winner. Maybe retail investors are just smarter than the rest of us, but I don't think they are. But I'm sure a retail investor right now is having a podcast going on right now and saying that the professionals don't know what they're doing. So keep that in mind. What questions does anyone have? Does anyone want to look at something in particular here? Let's just take at least 6 minutes here of back and forth before we take at least a 5-minute or 10-minute break, Zoom break. What kind of questions does anyone have? Just unmute yourself and just ask. Anyone? No one has
Wait, what's a
anything?
retail investor?
I'm
What do you
sorry,
mean by
Aurora?
that? What's a retail investor? What does that mean?
Oh, so a retail investor would be what sometimes you would just call like a mom and pop investor, someone who's got, so a retail investor would be, technically speaking, it's any household with less than $1 million in total investable assets. So almost everyone is a retail investor, right? So after retail investors, you've got high net worth investors. That would be households that have more than $1 million in investable assets. And then you would have your institutional investors. That would be banks, insurance companies, family foundations, pension funds, anything else, right? So, unless you're independently wealthy, probably most of us are talking about being retail investors here. And what we're saying here is that retail investors 5 years ago, let's just see if we can see a chart here. Let's just see here. I don't want to just say a number and it not be accurate. I'm just trying to see here if they're going to give me a picture here. Okay, so this is pretty good. So look at this. So when you look at this, Aurora, this would be like these companies, these 4 companies would be the kind of companies that you or I or regular investors would be using if we wanted to buy stocks and bonds, right? E-Trade, we all know E-Trade, Charles Schwab, TD Ameritrade. We could add Robinhood into this, although Robinhood's not a major brokerage at this point. It's still a minor player. But look at how many people are going into these brokerages, right? That for those of you who had me in class in the spring, I was talking about how they're going to zero commission and how more people were getting into this. Look at how it's increased even more since then. So it means that regular investors, mom and pop investors, are flooding into this space. Now, what I'm trying to say is that that's not necessarily where you should then be like, oh man, every like aunt and uncle and grandmother, grandfather is getting into this, so maybe I should get out of this, right? But the often repeated tale is that in September of 1929, right before the big stock market crash in October of 1929, the way that investors started to get concerned was that, you know, back in the day, you'd get your shoes shined, right, by like, you know, a kid on the street, and that these big bankers on Wall Street would get their shoes shined, and that the shoe shine boy, right, a kind of very simple kid, right, who just knows how to put shoe polish on your shoe and shine it, that when that kid was giving stock advice to the professional investor, that professional investor then said, oh my God, I got to get out of stocks, because if shoe shine boys are buying stocks and bonds, the world's going crazy. And I'm not saying that I'm saying that to you, but it should give you pause, right? That history does repeat itself to some extent. And, you know, there is something to be said for, you know, that there is something to be said for that. So, yeah, so I'm trying to look at this, or also too, just what you put on chat as well. Yeah, so the TikTok thing. Yeah, because I've seen these things too, like the TikTok thing where the people, I thought I had looked at this too in the spring semester of like, right, there was this like whole thing too where we were talking about like what teenagers say to their parents, right? Like what words they use to their parents so that they could say that they're not doing one, two. There's a, okay, so there's a hashtag for it, which would be investing.
Oh boy.
Yeah, it's just, I mean, yeah, Aurora, your kind of point here is, I mean, yeah, I mean, I guess it'd be the kind of the equivalent of the shoe shine boy kind of statement, right? If everyone on TikTok is saying, buy this or sell this, I mean, I get concerned, but again, you know, it's, I largely, I mean, it's really hard for me to pass judgment here because there are these points where I look like the smartest guy in the room, and there's these points where I look like the dumbest person in the room. And right, everyone's saying right now, so let's just take someone who has I think a very strong portfolio. That would be Berkshire Hathaway, right? And so if we look at what Warren Buffett has, that Warren Buffett has, that he got out of airline stocks very early in March, just after the pandemic occurred. And he had these large holdings in airlines. And then people would say then, wow, he's really dumb for getting out of airlines because they kind of recovered since then. But is he? I mean, if anything, I don't think that the share price reflects that necessarily anymore. Hey, oh, thank you. That sounds good. Thank you. Oh, look at that. You get to see I got a UPS package, huh? Fancy stuff.
It's like Christmas.
See, even professors have regular day stuff, just like all y'all. Ooh, I wonder what's in the mystery package. So I'm not saying that like that Warren Buffett is being, well, let's let's look at this very briefly here. While I'm opening this up, just to kind of answer for I just want to open up Bloomberg very briefly here. Any other question? I'm still kind of talking about what Aurora was talking about, like both TikTok and both like what the retail investors are doing. What I'm just saying to you all here, I just want to look at what Berkshire Hathaway, what its ownership stakes look like, and just kind of counter that to what a retail investor would have. Does anyone have I know some of you have shared a portfolio with me. Does anyone want to tell me anything that they own? Safe space. Safe space. No. Anyone?
I usually buy and sell cryptocurrencies. I don't do too much of stock.
Oh, like Ethereum,
So
stuff like that.
yeah, I do that. So
Yeah, I keep hearing the things about Ethereum. Yeah. Yeah, that's the play on. Right, gold is very expensive right now, and what happens if there's inflation? Right, I mean, because that is a really so let's counter what Aurora asked, like, in terms of like who is the retail investor, what are they buying? Let's counter that to what I'm saying to you all is what is the retail investor worried about and what are they not worried about? Here is what I would suggest. And there's no way to know whether I'm correct in my statement to you or not. But what I can say is that what professional, institutional, and high net worth investors are worried about is they're worried about inflation. That is their number one concern. And they're worried about the ability of the Federal Reserve to manage inflation in a market where the money supply is increased by a threefold factor what it had increased by during the financial crisis of 2008, 2009. So if you increase the money supply that dramatically, it would seem there has to be inflation, right? So then you get some retail investors like the Jerrys of the world who then say, yeah, you know what? I know that inflation might emerge too. So do you own gold too? Or silver or any commodities? No, yes. Jared, do you have any?
I used to. I don't anymore.
Why not?
Well, for me, it was more. I wanted to have my own gold and silver, and I don't know. I just moved around a lot because of the military. So
Right.
for me, cryptocurrencies were easier because you don't have to transport like gold or silver instead
So
of trusting someone to hold your asset.
so it's just a transportation issue? You didn't think gold was
I
too
mean,
pricey? Do you
it's
think
other
gold was
things
too
too.
pricey?
You know.
But do you think gold is too pricey right now?
Not really. I wouldn't say so.
What is it per ounce? I mean, I don't know. Was 1,700, 1,800 an ounce?
Let's
What is
see.
it?
Let's see. I don't know off the top of my head.
My data is about a month old in my head, so. Let's look at the gold ETF, GLD. Or someone look it up. Someone look up ticker symbol GLD. Oh, I'm logging in here to Bloomberg.
It's at 185 right now.
Okay. That gives me a sense of what's going on
Yeah.
there. Okay. Okay, can you all see my Bloomberg screen? Or at
Yeah.
least the beginnings of it, yeah?
Yes.
Yeah, okay. I'm just waiting for it to load. So you all, by next week, will at least be able to do the beginnings of this. Now, again, you can't break it. And just remember, the school is paying many $72,000 for our year or 1 year access. So I want you to use it a lot. Get your certification. Use it a lot. You'll be able to use it. So the way that this will work is that we have you'll have 9 or 10 subscriptions. So 9 or 10 of you can all be simultaneously using it at once. That's our number of subscriptions. After that is done, you won't be able to log in. So, right, we'll have to set up some kind of rules of protocol, right, where, don't hog the system. But my sense is, right, we can all be using it and, right, Jerry seems like a late night kind of guy, so maybe he'll be up at 3 a.m. using it, right? Where Elijah seems like a go to bed at 1 a.m. kind of guy. Are you, Elijah?
That's partly because I learned it in the CFA competition.
Yeah. Let's see here. I'm gonna look at all the participants, and I'm gonna try to predict who goes to bed the earliest. My prediction would. Well, I know Levi goes to bed pretty early.
Yeah, I'm forced to right now. But
Yeah.
if it was my way, I'd probably be an all-nighter.
Aurora, I don't know you well enough. Do you go to bed early?
I'm like a 1 o'clock kind of person.
That's pretty early. Okay, right. So the Auroras and the Levis of the world will be using it at a time when the Jerrys and the Shidings of the world will not be. So the idea is, we'll see how it goes. But if that's our problem, that's a good problem to have, right? And I'll be able to kind of track and see. But basically, by next week here, by Monday, everything should be up and ready for Bloomberg. Now, the power of Bloomberg would be that is that I'm just going to look at the Class A shares. It doesn't matter which one I look at here. Berkshire Hathaway has Class A and Class B shares. For any equity holding out there, right? So to get to go back to Aurora's original point, a retail investor can buy BRKA and BRKB. That's the ticker symbol, right? So you or I, as a retail investor, can go out there and buy this, but so can an institution. Okay, so let's look at this from both perspectives. Who owns Berkshire Hathaway? And on the other side of it, what does Berkshire Hathaway own, right? Because that would be the kind of two sides of it for this firm, which actually doesn't make stuff, right? It's not a manufacturing firm. It's a firm that owns stuff. So let's look at it. So I'm looking here first at the ownership summary here. And we can see here that 1,000 some institutions hold it. Individuals own, surprisingly, individual investors own almost 2/3 of the shares. Pension funds, insurance companies, corporations don't own very much. And then advisors who presumably own it for regular investors almost own the remainder portion of it. Most of those investors predominantly are in the United States, with a lot of people in Liechtenstein and Norway owning it. Okay, interesting. Now let's look at Yeah, Truman, they, oh, that's exactly what students are asking right now. They're like, how long can Shiting talk for? I just want to go a little bit deeper into this here. So if I look at this company and I look at its earnings, right? Earnings per share on an adjusted basis. And look at that. Year over year growth, earnings per share down 25%. Yet, if we look at the share price right now, even for this, would be $327,000 a share. This is for you. The share price, even if we just look at this, sorry, I just want to look at a chart here. So we can see there that the earnings per share are down 25%. Yet, if we look at this just very simple line chart here, look at the share price. How can it be down 25% on earnings per share, yet be doing as well as it was when earnings per share were higher? Right? I mean, that's the conundrum that the retail investor faces versus the institutional investor faces. And now, if we look at what does this company oh my God. If we look at its comparisons here, what space is it in? Well, Berkshire is pretty heavily into insurance. Geico is how they make a great deal of their money. You know, they own Burlington Northern, the railroad, so they put it down into railroad here. So part of this is it might be difficult to put it into a similar industry. But then the other part to this would be, let's just see if what the research says. I'm just curious.
Shiting, you're not showing what's on your screen right now, are you?
I am.
You are?
Are you not seeing? Yes.
Oh, not seeing.
Does anyone else not see? Give a thumbs up or thumbs down if you see my Bloomberg screen here. Yes? No? Okay. Probably swipe, Freeze, just swipe left or right if you're using like your computer. It might be showing just the participants and not what my screen looks like. If anything, the video at least is going to show you what I'm doing here. So I'm just trying to sort through this.
I figured it out.
Okay, good. Right, so here we can see most of its business would be insurance companies. And then these are the other businesses that it wholly owns, right? Energy companies, it owns the railroad, other things like that. As we go into this further here, what we can see here, going back to when I was talking about the turnover, is that we're not seeing, we're not seeing as much turnover in this kind of company. And the reason why we're not seeing that much turnover is because this isn't like one of those companies that's gonna like pop by like, 5% or 10% in a day. Yet, I just want to look at the one that let's call them the more of the Aurora and Shiting style share class, Berkshire Class B. All right, so this would be more of the, so I say that because this would be, you can leave it there, I'll bring it upstairs. So I was just looking for here, or maybe I guess I could say the Karen as well, the Karen, Aurora, Shiting trifecta. If we were buying this company here, we probably would not be buying Class A, we'd probably be buying Class B, and that's at a more reasonable price of $2.18 a share. What I'm trying to emphasize though for you here is that despite the fact that the earnings per share went down by 25%, why is the share price as high as it was at the end of February, even though the earnings are down? The only way you can make sense of that is either there is no other alternative, right? So if you can't put your money in a savings account or a checking account, or maybe you're like Jerry and you don't put it in gold, maybe you have to put it into this and you don't like the idea of holding cash and missing out. Or there's something else weird going on, like the Federal Reserve putting lots of money, making money so cheap that businesses are taking out untold risks, and maybe even retail investors are taking untold risks and buying things that they think will allow them to make, right? So maybe in this case, Aurora, you could find and see if there's a TikTok video of someone buying this company. I doubt it because it's not that exciting. It's not a TikTok worthy share, but there might be something like that going on here. But I assure you that in the institutional investor space, this share price isn't being driven up by the institutional investors. As we saw with its holdings, it's largely retail investors that own this space, and it's all being driven by retail investors. See, any question? Oh gosh, I've gone way over on time on talking about this, but at least give me a thumbs up if you felt the time was worth it, I guess. You can give me a thumbs down or a thumbs sideways, but I'll at least take a few points. So thanks, Levi. You don't want to show us your face, dude?
My webcam is broken on my laptop.
We've had this conversation before, haven't we?
Yeah.
Did it burn? Your computer burned through it, didn't it?
Right.
No.
So the motherboard got a little melted. It still works great. It's just that I have to have additional peripherals on top. So if I wanted to have a webcam on my laptop, I would have to buy a separate one, like mount it or something, or a USB webcam. Or I can use my phone, but then I have limited visibility and whatnot. So it's just kind of like a trade-off situation.
You don't need to see your beautiful face. Okay. So now let me go to, oh, this is the other thing. Sorry, I did want to show everyone this. Everyone can see my screen, right? Like I'm looking at my email here. Yes. Okay. I got this last night. Look at this.
Whoa.
This shows you the involvement of the Federal Reserve in things other than treasuries.
Oh. Yeah.
So this would mean this is the involvement of the Federal Reserve now in the markets. In this case, it's only in the corporate bond markets. But you have to believe that what's going on in the corporate bond market is going to feed over into the corporate equity markets. That's what I'm saying here. Even though the Federal Reserve is not involved in buying shares of stocks, they're getting involved in the bond market. What that means is that if a company needs to raise money, it's actually far cheaper for them to get their funding from the bond markets now, because the Federal Reserve has made it so cheap, right? If you're Coca-Cola, an investment grade company, you've got so much cash. And the worry of a institutional investor would be is, what does Coke do when money is so cheap? Are they going to be stupid, right? Are they going to say, like, we're going to, right? I mean, the concern one always has with Tesla, right, is that, right, Elon Musk, right, wasn't he going to buy that, like, the boring company, right? He owns that boring company, like a company that's going to, like, dig a deep hole. Like, is that going to make money? I don't know. But on the other hand, one reason among many why I'm not a shareholder would be I'm not sure I want him using my money to dig a deep hole, right? Like, and I guess why I am invested in Coke and not in Tesla would be I trust that the pinstripe wearing, suspender wearing, boring Coke executives are probably going to stick pretty close to beverages. They're not going to do anything too crazy. About the most exciting thing that Coca-Cola has done is they're getting rid of chilled juices. That's about the most exciting thing that they've done in the past 9 months, because it's actually very expensive and the margins are lower for them to have chilled juices because they have to rent that space from the retail grocers. So they're getting out of that space and they're getting more into energy drinks and fusion drinks and things like that that aren't refrigerated. I'd rather a company use my money to take a bet like that than dig a hole. Okay. Um, Sorry, I'm just trying to look for. Okay, well, it's 6:24 here. Let's just take a break till 6:30. I'll pause the recording for right now. Stay in the meeting though. I'm going to pause the recording for about 6 minutes, and then we'll all come back on here. So let me try to figure out how to pause things. You can all do what you want to do, and then I'll start talking again in about 6 minutes. Just wait here for a little bit. Can't say you don't get your tuition dollars worth on a day like today. Get to hear my dinner being made for me. Yeah, pretty exciting, huh? Get to see me getting a UPS package in. Stuff in the Shredding household. Got Twister on in the background while I'm teaching. He's got to try to get out of the tornado coming in. I mean, Twister is a pretty good movie. Freeze, when you say so? Twister? Twister, isn't Twister a good movie?
You're
Really?
telling me, right, Shining?
Yeah, Twister, not a great movie? Come
Well,
on.
And back in the day, when I was a teenager, I liked it, but it's a good movie.
I mean, granted, the movie I'm looking forward to seeing is Bill and Ted's Excellent Adventure 3. I'm really excited. I really want to see that.
Which movie are you looking forward to seeing?
Bill and Ted's Excellent Adventure 3.
Who's Excellent Adventure 3?
Bill and Ted's Excellent Adventure.
One of Keanu Reeves.
Yeah, like.
I wonder how that's gonna go.
I am also curious how that's gonna go.
I don't know what the reviews are, but.
Shouting, did you hear about the news in Kenosha?
I did, but I don't know. Like, I think everyone gets all worked up about stuff.
You're tired of hearing about it?
There are really big issues involved. I honestly don't think I'm smart enough to understand all the nuances. And unfortunately, I don't have the time to sort through all the stuff out there, because think about it. I mean, my sense of things like that, right? So I'm not trying to minimize either side. Obviously, I have a point of view that makes me more inclined to believe one side than the other. But at the same time, all the news that I get would be, right, either proponents of the one side, because they have a very big interest in getting their side out, or proponents on the other side, right, who have also a very strong side, a strong incentive to get their side out. I don't have the time to like get a balanced point of view. So without the balanced point of view, I've made the conscious choice to not make any decision at all. Like, it's just too hard for me to understand, who was carrying what, who said what to who, like, then I just become a divorce attorney, right? Like, have you ever talked to a divorced couple, right? No divorced couple says, it was his fault, and the guy says, yeah, it was totally my fault, right? It's always like, he did this, she said this, right? I mean, and the truth is somewhere in the middle. And I think, and as hard as it is sometimes for me to stomach the fact that the one side, which I think is really in the wrong, I have to somehow believe that there's at least a small element of maybe there was something that could have been misconstrued and would put them in the right? Like the cops saying, they do have to make a split decision. I'm not trying to defend their actions, just trying to say, like, it's a job. Everyone makes mistakes. Unfortunately, when like I make a mistake, the consequences are small, right? When someone, with a pistol starts shooting away, right? I mean, their consequences are a little bit more. And it goes the other way too, right? The guy the family could just be like, dude, the guy's going in his car and you shoot him in the back. Like, each side can feel wronged, I think, in some way. And it's just, I'm just not smart enough. Honestly, I'm just not smart enough. And I'm not, and the other side of it is I'm not invested enough, right? Like if I was a cop or like all my family members were cops, then I'd be like much more invested in it, right? Or if I were a minority, I'd also be much more invested in it. Or if I lived in Kenosha, I'd be a lot more invested in it. It's just my way of saying, like, with limited bandwidth in my brain, dude, I'm just trying to survive in this world. Which means I'm more interested in Bill and Ted's Excellent Adventure. Has it
They
been
have
released
3
yet?
of them.
Yeah, well, 1 and 2 came out pretty shortly after each other. I don't think it's come out, or no, it got released a few days ago. Has anyone in the class seen it? Can anyone in the class report having seen it?
I haven't seen it yet.
Are you going to see it?
I'm thinking about it because I like Keanu Reeves. He's one of my favorite actors.
Exactly, he's a great actor. Okay, not that I want to take our time doing this, but for those of you who've actually had me for a physical class, you would know that I like seeing a trailer every now and then. I'm gonna click videos. Okay, is this is this the original? Okay. Okay, we're gonna have to see this ad first. Sorry.
You're probably gonna have to reshare the screen with computer sound
Oh,
unless you want us to watch it
sorry.
silenced.
Thank you. Well, that was a pretty bad trailer to show. Oh, wait, this. Okay, so to put that in perspective here, what's going on here, I'm not just wise about the market, I'm also wise about, sorry, I'm just trying to see here what the, oh, okay. Andrew, I'm hoping you can hear it now.
So
To
you
put
know,
this in,
sorry,
go
you know
ahead.
when you share a screen, there in the bottom right or left is like share sound as well.
Oh, shit, okay. Here we go. Can you hear it now when I do the music? Yes? Yes, someone say something. Yes, no. No? Yes?
I don't hear it.
It's not that important, actually. I shouldn't get so excited about this. Because fortunately, we don't need audio.
What's amazing about it?
It's fine. You're not missing too much. Okay, the whole point of Bill and Ted, for those, the few of you in this class who probably have never seen it, which is sad, they go back in time and then go forward in time. And just like a time travel movie, just like other great ones like Hot Tub Time Machine and Back to the Future, there's an element where they're trying to change the past and change the future. Yet, in the end, Bill and Ted's Excellent Adventure, the great part about that one is that all they're trying to do is pass history class the laziest way they can by stealing people from history to come up and just talk on the final presentation day. And so they get Abraham Lincoln, they get Joan of Arc, they get Genghis Khan, and a few others to give like a presentation at San Dimas High in San Dimas, California. And they become rock stars of a band called Wild Stallions. In 2, I actually don't remember what happened in 2. I mean, it wasn't as great as number 1. I'm still going to see number 3, but I don't think 2 is as great as number 1. Oh wait, in 2, the 2 women that they get together with, well, I'm guessing they're still within number 3. Something happens to them and they have to, I don't know, save someone or something like that. And now we've got number 3. I guess that's not that important. Okay. Oh, sorry. Going back to this. So I just want to go back to the La Lima site before I actually get into some of the slides here. So if you go into certification in analysis, I'm going to start populating this tab very soon, Bloomberg Markets. That's kind of my task here for this week and early next week. That's going to be your go-to tab for learning how to use the Bloomberg system. Everything from how to log in, to how to use it, to how to do the training. So that's all going to come from there. As Jasmine pointed out in an email to me that I haven't replied to yet, you are going to have a class code. That's going to be where I can track that you did it and that you completed it. So I will give you a class code just to kind of manage all of your subscriptions. But I'm not tracking your use of Bloomberg or anything like that. Really, truly, with Bloomberg. Again, keep in mind, the institution and the federal government have paid a lot of money to give us this for a year. I really hope you'll use it a lot. If not, you're just giving me very expensive use of the system. That's all going to be here in Bloomberg Markets. That's all going to be in this tab here. Okay. Under weekly tasks here, I want you to go back to week 1. Look at Karen. Karen's face must have been so interesting that YouTube thought it was interesting enough to make her the most excited person for the lecture. Whose image it will be this time around, I guess we'll see. I put the core focus of this course, which is the CFA certificate. I put the overview sheet here, so download this just to know what you're getting into. And then I suspect most of you have not done this yet, so that would be your first task to do after this lecture, which would be start to sign up for the CFA website and the CFA Foundations Institute Investment Foundations exam. So follow this Google Doc that I've posted, follow the links, follow the tabs, and register for the CFA site. Once you do it, once you create a login for the CFA Institute and you register for the exam, you would be able to go onto the CFA website. And once you're logged into the CFA website, which I'll show you how to do in that Google Doc, then you would click on My Account and your Investment Foundations program will show up here. You would click it. And you'll obviously see here I haven't done any exams or anything like that. But I would go into Candidate Resources. And I'm going to use primarily this learning ecosystem. I'll make a standalone video that just goes through this. So I'm going to create another tab, just like there's one for Bloomberg Market. I'll create one for CFA Institute that will walk you through this. I'm just trying to do this in lifetime as well. But this learning ecosystem is going to be important because I am going to talk about slides here and you're going to have the chapters that you're going to be able to read. There's like 620 pages of materials. But the idea is that you're going to have to be doing some independent studying as well. As I pointed out, it's about 100 hours. Why is it telling me this? Oh, did I just put in a date? Oh, I can just put in any date. You can put in any date that you want here, and it would tell you how many days down to that point. But here we're going to be starting to talk about chapter 1 here. Okay. So if I'm starting to talk about chapter 1, which is this, the investment industry, or the investment industry, a top-down view, then for each of these, right, I would have the learning outcomes for each of these chapters. So each chapter is going to have learning outcomes. I don't really care if you care about the learning outcomes or not. I've never been that big about learning outcomes, to be honest. You don't need to read the discussion unless that's something that you're interested in. But then you would use the navigation tabs then to, look at things as you want to look at things. You can highlight things. You can write notes to yourself. But the other thing you can do would be that as I'm going through this, again, I can highlight things, I can take notes, I can bookmark things. But what I can also do is I can look at these practice questions. So even though the exam is all multiple choice, you get almost 6 times as many practice questions in this learning ecosystem as you're going to be presented with. So if you do the practice questions, you're going to do fine here. So now I would start to see a major benefit, right? So I would have read all the stuff in this chapter here, the chapter I'm going to start talking about here, question 1. And I would see, okay, a major benefit of competition in financial markets for the individual investor is, well, I happen to know that it's lower prices. Damn, right? I got it right. So now I'd feel more confident, right? But what if I had said, let's do another one here, and I'm going to say the wrong answer. One characteristic of a liquid financial market is C. So I purposely gave an incorrect answer here. And so fortunately, it gives you enough information about why something is right, why something is the correct answer, for you to be able to think about it again. And you will be able to do the practice questions over again if you want to. Right, and I could keep going through this and going through this. I don't want to use up all my questions here. But you're going to do these practice questions as we do these chapters and we work through this. The idea is that I'm certainly going to run out of time today. It's 6:47. Probably what's going to end up happening here is, I think we've all agreed to, and it sounds like it's going to be what's going to work out best here. I have actually prepared here materials for chapter 1 and 2. I've prepared PowerPoints and I've prepared talking points. So I think what might be best, just for our use of time, is that I can create videos for those two, and I would post the PDF of the PowerPoints, the PDF of the slides, and then I would post a YouTube video for the for me talking about the slides. Does that sound like a good use of our time? I don't want to just waste time. Does that sound okay? Because otherwise, I prepared 2 chapters, chapter 1 and chapter 2. What I would do as my homework for all of you would be that I would prepare, I would post chapter 1 and 2 slides and 1 and 2 videos. It would be on you to sign up for the CFA Institute website this week, and it would be on you all to read over those 2 very easy chapters and to at least familiarize yourself with the learning ecosystem, so that in a normal week, the chapters that we cover, you would be reading those chapters and you would be going over the practice questions on your own, such that by November and December, as we're kind of finishing up things, we would all be doing practice questions together so that by December, you're prepared to do the exam on your own. Does that sound like a good plan, or at least a good plan of attack?
Sounds like a good.
Good.
Yep.
Yes.
Yeah, sounds good.
Yep.
Okay, so why don't I do this? And if we're coming upon 7 o'clock here, I know technically we go till even a little bit longer here, but let's just say that you will take the time now that you know that it exists, follow the instructions I give you on your computer to set up the CFA Institute login and register for the exam. And then at least know that the learning ecosystem exists out there, and that's what you're going to be using to basically study for this exam. Yes, and know that I'm going to then do the following so that you're all familiar with it. Andrew, you're probably the least behind in this, or you're probably the most behind in this class, but hopefully you'll kind of see what I'm doing here.
I'm just trying to remember the aspects of the exam, but all of it's online, right?
It's all online. Basically, this exam covers 7 modules. The 7 modules are split over 20 chapters. There are some chapters that are very intense. We're only going to be able to do a chapter a day. There are some chapters like this, which are very easy, I think, in my opinion, like ethics and regulations and the introduction. Or what does the investment industry look like? So something like Aurora's question, which was, what is a retail investor? That's actually answered by in this first chapter, right? So it gives everyone kind of a basic foundation framework to work with. Then when we get to ethics and regulations, right, again, laying the groundwork, pretty easy. It's not the focus of the exam. So we're going to be able to do 2-3 chapters all in a single week. There's going to be some weeks like the financial statements week where I'm probably going to be even in a little bit over my head. I'm probably going to have to rely on, fortunately, the many of you accountants in this room to help us get through that. You know, we're going to cover derivatives in 1 week. And that's just going to be 1 week. So there's going to be some weeks that are very intense, others where we're going to go through 2 or 3 chapters because we can, I think. And again, I think if we do our work correctly, we should be able to get through most of the chapters by the time this semester ends. With a little bit less Bloomberg time on my end, but again, I don't think I wasted my time with our initial discussion because part of it was, you know, inspiring you that you made the right choice by staying in this course. Okay, so what I'm
that makes that explains the mock exam, A, B, and final exam. So
Yep.
those
So
are the
to be
same
able-
things on the left side of the menu.
Yep, so to be able to take the CFA Institute Investment Foundations exam, you have to do mock exam A and get at least a 70%, and to do mock exam B and get at least 70%. So if you get through A and you get through B and you get at least a 70%, then you can sit down and take the regular exam. All you have to do is not proctored. All you have to do is like sign a web statement saying, I'm not cheating. And honestly, given the number of questions you have to do in the time that you're given, you wouldn't be able to cheat very much anyway. So what I'm going to do then is create another tab here, and I'll just title it CFA Institute Investment Foundations. And I'm going to post videos there of how to sign up for the CFA, how to get your CFA login, and then how to use the learning ecosystem. And then under weekly tasks, that's where I'm going to post the videos. So now under week 1, I obviously posted the week 1 video. So now I'm going to create a week 2 one where I'm going to post the week 2 video.
Okay, and then are we writing reflection paper 1 like after this week, or how is that going to work?
There's no reflection papers.
Okay, great.
So what I'll do here, it seems like the easiest way to do it. For module 1, there's a chapter 1. I'll start posting my, under modules, I will post my slides and I'll post my lecture for each chapter. So under each module, there'll be chapters, and under each chapter, there'll be then 3 things. There'll be the PDF of the chapter, there'll be the slides that I prepared, and there'll be the video of me talking about the slides. Okay.
I'll just answer asking my questions I had about the syllabus after last week's class.
No, no worries, no worries. I think, again, too, I know it's kind of, some professors are really good about having the Laulima site all in final form by the first day of class. I know I'm kind of populating things now, but if you ever have if any of you ever have any questions about where something is, you can either wait till class, or it's just very easy to just send me a quick email, and they can be something really simple. You don't have to worry about it. It could be like, dude, Shiting, where are you posting our lectures that we had in class? And I'll tell you exactly where to go to get it. Okay. So don't think like you have to be like that. I have to think you're the super smart person that knows where everything is. Just ask questions, any questions you have, and I'll tell you where it is. Okay. But what I'm hoping with next week then, when I do this, would be that you would be able to log by next week when we start class. You're going to have your CFA Institute login. You're going to be able to log in. You're all going to know how to log in. You're all going to know how to get into the learning ecosystem. And I'll do the thing in the beginning still where I'll talk about what's going on in the markets. But my hope is that you'll be able to as well, I'll be able to talk a little bit more about Bloomberg, because that's probably going to be up and running. Hopefully everything will be up and running by next Tuesday. So I'll be able to talk about that a bit more. But then again, you'll have your CFA Institute login. I'll be able to walk you all through a little bit more of the learning ecosystem. It's just that the thing on you, the independent studying, it's all going to be on you to go through like practice questions on your own. We're not going to all do that together. The only thing we would do together would be if you wanted to say to me, Shiting, I'm having a really hard time about practice question number 6. I don't understand that explanation. That'd be a perfect thing we could talk about in class. It's just that, right, I can't control the fact that the Shitings like me only like to study, like they like to binge. I'm the kind of guy in high school that would like wake up at 6 a.m. to start studying for the exam, right? Whereas Aurora probably was a early studier. Were you an early studier, Aurora? Yeah. See, right? So I don't want the Shitings keeping back the Auroras, right? I don't want the Shitings keeping back the Michaels. I don't want, everyone doesn't have to be me. We don't all have to be Michael and Aurora, right? So like, if you never take the exam, that's on you, right? But I want people who like to prepare ahead and they want to get this, they want to start working through these practice questions now because they know they have the time to. You can do that, right? You can start working through the learning ecosystem now. I've actually prepared slides for almost all of the chapters at this point. I just haven't prepared the videos at this point. So I'm going to keep working ahead on the videos. I'll start posting things as I have them done to allow you to work ahead as you want to. But basically, in these first 2 chapters, they're pretty simple. This first one's just about what the investment industry as a whole looks like. And the second one is about ethics and regulations. Look over those slides, watch my videos. They'll each be about 30 to 45 minutes in length. And then get signed up for the learning ecosystem and the CFA Institute website. That would be your homework. And what I'll do, just like I did last week, is, and this will be useful for you, Andrew, to see this, for each weekly tasks, I set this up here. So I'm probably just going to repeat this one, sign up for the CFA Investment Professional exam. That's probably going to become one of my week 2 agenda points. So you just basically have a checklist of, I know I need to do this before I sign up before I come to class next week. If you don't do it, I don't care. I'm not going to make sure you do it. But week 2 is going to basically say, watch my chapter 1 video, watch my chapter 2 video, sign up for the CFA Investment Professional exam. And maybe if the Bloomberg stuff is up for running, I'll start to outline those things for you to do. Okay? So I'll start to populate that maybe tonight, but if anything by tomorrow. Okay, so there'll basically be a weekly tasks there's now going to be a week 2 because we're now in week 2. Okay.
Got it. And just to have a solid idea, so I understand what we have to do for like the exam part, but just as from a UH class perspective, basically how this class grading goes is just the fact that you do the 2 mock exams and the final exam is what essentially determines the grade in this class, right?
And not necessarily. Again, safe space. We're all being honest with each other. If you are coming to class, or even if you're not coming to class, and I know that you're watching the lectures, right? Because in La Lima, I can tell what you're all doing, how long you spend on things, whether you're downloading things. I know all, right? If I can tell that you're engaged in the class, right, and that you're working through the materials, you're working through the learning ecosystem. Even in the learning ecosystem, I can tell how long you're spending on things. So if I can tell that you're doing those things, and you're doing what you're supposed to be doing, that you signed up for the Bloomberg thing, you did the training there, then you're going to have an A in this class, right? The situations where you're not going to be the person who gets that A in the course would be you didn't do those things, or you didn't do all those things, right? So if you did everything but do the Bloomberg training, then, right, you're not going to get an A in the class. You'll get something less. It's not going to mean you get an F in the class, but you'll get something less than an A. Originally in the syllabus, I said like mock exam A, mock exam B, that you had done these things. The only concern I have is that you might not be able to do mock exam A and mock exam B until November and December, which would leave you in an unfortunate position where you don't know what your grade is. You don't have any grades until November. And then if you're failing the mock exams, you could end up failing the course if I followed the syllabus religiously. Fortunately, all of you in this class, I all know. So I all trust you at this point, and I all trust that you're going to do what you're supposed to do. And, you know, we're going to have some weeks where some of us are really engaged because, you know, we have the time to be engaged in that kind of way. And there's going to be some weeks where you're like, dude, shedding, I've got a lot of shit going on. I don't have time to be doing this stuff this week. I totally understand that. But as long as you're honest and as long as you're doing the work in the class, you're going to get an A in this class. But again, if you don't and you just try to fake it, you can fake it, right? You could leave La Lima logged in all day. You can do the downloads. You know, you can fake it and make me think you're doing what you're supposed to be doing. Unfortunately, you're not going to pass the investment foundations exam, and you're not going to pass the, you know, you'll get the Bloomberg certification, but you'll have then wasted $362 in tuition dollars, in my opinion, by taking this course. And you'll have wasted a lot of time when you could have just actually, you know, spent the time to actually get the CFA Institute only offers 3 exams. And it offers the CFA Investment Foundation certificate. It's a digital badge you can put on your resume. It shows that you're serious. You can do the 3 exams that are associated with the CFA designation, and they offer a CIPM, certification in investment professional management or something. It's just that this certificate that we're all studying for, it's the only one that doesn't require you to have industry experience, meaning it's the only one you can do right out of college. Which would mean it's the only way you can distinguish yourself from everyone at Manoa and everyone else who's, you know, also doing some finance things. So if you don't do this course the way you're supposed to do it, you can probably fake it and get an A, but I assure you, you will not have gotten as much out of this class as you should have gotten out of it. But that's kind of like every class, right? You could Quizlet everything in some class and get an A, but you didn't actually learn anything. So it's totally possible to Quizlet this course in a different kind of way and get an A in this course, but you're not really serving anyone. And quite honestly, you're not really hurting my opinion, you're just hurting yourself. Okay, with that said, just like last week, I will log off last. So if you have any questions or concerns, stay logged in and then just ask me. Otherwise, I'll just log off last. Okay, see you, some of you on Thursday. Otherwise, I will see you all next week. And when I say Thursday, I mean like if you're involved in my intermediate course. That's what I mean by that. Okay, see you all at some point later. Yep, bye.
See ya.
Thank you.
Bye.
Hi, Shining.
Bye. See ya.
Talk to you tomorrow night.
Okay, sounds good. See you. Yeah, it's right, Freeze. I will talk to you tomorrow night. Yep.
Sade, I
I
have
have
a question. Oh,
Okay, go ahead.
Go ahead, Michael.
so are we supposed to see anything on the Bloomberg market tab or not? Not
No, not
anything?
yet. Nope. So
Okay.
everything. So what I did yesterday was I was on the phone with our rep for about an hour or so, just kind of getting all the documents. I know that everything is set up. I physically walked over to the lab to make sure the computers are all installed. So now what I need to do is populate it with all the things that you as a student need, meaning like here are the instructions for how to sign up for a Bloomberg terminal login. Here's how you find the Bloomberg market concepts to, to do the training. And here's how you can kind of basically play around with it. So all of that is the tab that I start populating this week. So right now there should be nothing as of this week.
Got it.
Yep.
Okay. Thank you.
Yep, no problem.
Oh yeah, so is the chapters that you posted in the modules, is that the same thing that's under lessons on the CFA website, or are those
Exactly. Yep. So all I did there was so you've got several options. So for instance, if you're like really a paper-based person, you can actually buy the books on Amazon, like all those PDFs in a professional book. All I tried to do there was it's just that sometimes like the administrators and whatnot want to see that I'm using a book of some kind. So they could go into my La Lima site and they could see, oh, Shannon's got these chapters posted so that the students have readings, right? So you're going to see this reading here, but it's exactly lifted from the CFA site. So if you go into that learning ecosystem, that reading in the learning ecosystem is exactly the same as this. So it's the same as like if you bought a physical textbook from a publisher and then you had like, My Lab, where they have the reading in there as well. It's the exact same thing.
Okay.
Does that make sense?
Yeah. Oh, and then the Bloomberg markets, that's like a completely separate thing than the CFA part of the class, right?
Exactly. So there's two parts of this class. The Bloomberg market concepts part is actually pretty small. It's it's an 8-hour training. If all you said is, you know what, Shiting, I don't really want to learn that much about Bloomberg. I'll just do the 8 hours of training modules and then be done with it. You can totally do that, right? And just put in the minimal time and then really focus on getting this investment professional designation, which in my opinion is probably more important than the Bloomberg thing, because you can always it's easy to get immersed and, down the rabbit hole in doing Bloomberg stuff. But there's going to be others in this class, kind of like Jerry, who I don't know if you saw him in the participant list. So Jerry really is probably going to focus probably more on investment stuff. So he's probably going to be totally pumped. He's not going to want to learn maybe as much the theory. He's going to want to learn kind of like trading tips and tricks and things like that. So he might end up focusing a bit more on Bloomberg stuff. Totally fine by me. And it kind of gives you some flexibility, right? It's doubtful that someone would spend 50% of their time on one and 50% on the other. It's just kind of based on what your priorities are as a person.
Okay. Alrighty.
Sounds good.
Okay, thank you.
No problem. No problem. Bye. What about you, Michael? What's going on with you, dude?
No, I was just listening to the questions in case
Yeah, nothing interesting came up. I did not read. I'm going to read it tonight. So I'm going to read the Roman article tonight. Here's my question for you, though. Here's what I've done for you, and here's what I need to know from you. So what I did is I printed out the physical book for you because I had that PDF, and I 3-hole punched it and put it in a binder for you. When would you be able to come onto campus to get it?
I could come tomorrow.
So here's what I'll do then. If you can come tomorrow, what I can do is I'll put your name on a Post-it note and put it on a binder. and put the binder in a plastic bag and put it outside the door of my office. Because you're going to
Okay.
come during the day, I'm suspecting. I will not be there during the day. I usually don't come in until like midnight or 1 a.m.
Hey, sorry to
So-
interrupt, but I think Andrew has a question in chat. He's been trying
Okay,
to.
I'll go to that. Okay, sorry.
Yeah, after you're done talking with Mike.
Yep. And so I will put it in a binder outside my door, and you can just pick it up. That has then the physical reading of the journal article that we're going to talk about tomorrow, and it has the whole big book. And I just 3-hole punched it and printed it out for you.
Okay.
Put it in the
Well, I
binder.
highly appreciate you going to all that trouble shedding.
No worries. So pick that up tomorrow, and then just text me when you've done it. That way I know that you picked it up and that some.
I could come by. I could probably come by at midnight and get it, but
Yeah, I think
what time will
security will be grumpy. I think security gets grumpy when they even get grumpy when I come to campus.
what time will it be available?
I will, before I leave tomorrow at 5 a.m., 6 a.m., I'll have it outside my door. So anytime after 6 a.m., come to campus
Okay.
and just come to my office and pick it up.
Okay, Shane. I will talk to you tomorrow night at 7 then.
Sounds good. Yep. Just call
Okay.
me if I forget for some reason. Okay.
Okay. Aloha.
Good. Sounds good.
Okay.
Otherwise, I'll call you. Okay.
Okay.
Andrew's question. So let me, Levi, I don't know if you have a more pressing question, but is it okay to go over Andrew's question?
Oh yeah, no, I'm just
Okay.
listening to the questions.
Okay, sounds
Here's
good.
any-
Yep. So, Andrew, I can't emphasize enough how important earnings per share is, EPS. I don't think investors give anywhere near the attention to this number and PE ratios. I mean, when I look at any stock, I don't really look at the share price. I mean, the share price is in my mind as kind of like, I kind of know what, I don't know, about 50 different stocks, 100 different stocks. I kind of am always kind of watching what the share price is. You could ask me, and I kind of have a general idea of what the share price is, but the share price doesn't get me to buy it, right? Whether it be low or high. Like, Berkshire Class A shares, we just saw that that's $312,000 a share. Does it bother me? No. I mean, it's certainly something I'd have to look at to figure out what's going on. Or like Expedia back in the day used to be like $1,800 a share, $2,000 a share. Yeah, it's a pretty high price compared to like, Blue Apron or some of those like really low cost penny stock companies out there, but that doesn't mean anything to me. What really matters to me is if I looked at what a company's profits are, its earnings. If I looked at what its profits are and I divided it by the number of shares issued, that would be its earnings per share. So that would be its total profits divided by the number of common shares issued. That's EPS. What that does is it gives me a general idea of how much profits are contained in each share. You use earnings per share to then talk about the PE ratio, the price to earnings ratio, which is the share price divided by the EPS. So EPS is used to give you the PE ratio. The PE ratio tells me as an investor, how much am I paying for each share, for each dollar of profit in the future for that company. If it's very high, like we saw it is for Tesla, that means that investors are demanding, expecting that that company is going to raise a lot of money, is going to make a lot of money in the future. And if it's very low, the company must be not earning a lot of money. It must be just a low margin business like Coke is, right? Or like an electric company is. Whereas a tech company, even Apple we saw, isn't that high. You just have to be like out of the world crazy like Tesla to have a crazy, that's why I don't understand, right? I'm still sharing my screen, I'm assuming here. That's why it doesn't make sense to me why anyone would buy Tesla at this point. Because, sorry, threw a D in there. I don't understand why in this world you would expect that I would pay $1,220. So the way you would read this, Andrew, just to make sense of this, is I would have calculated the earnings per share by taking. Okay, see here. So we're going to go here showing because they're expecting a high return. Yeah, they're expecting a high return, but what they're really expecting is incredibly high profit levels to be sustained. Tesla's barely making a profit right now. Now, this doesn't mean we have examples in the past of a company having a really high PE ratio and pulling it off. Amazon, Netflix, those are companies that investors thought were going to do really well, and they ended up doing very well. But what I'm countering to you is that those are exceptions to the rule, one, and two, they were never valued as extreme as Tesla is valued. Let's look at it this way. So the way you would read this, Andrew, just to make more sense of this too, is that if Tesla is $475 a share and the profits are very low, that's how they're getting that the price of $475 a share, that would be in the numerator.
What?
What?
They're still in that
Yeah, Andrew asking a very good question. You know those sorry, Andrew and Levi. Do you know I was gonna come outside for you and look. You got to work?
Yeah. Jeff's dad helped me.
Oh, that's good. Whose dad helped you?
Jeff.
Who's Jeff?
Felix's dad.
Oh, yeah, Felix's dad, not Jeff's dad. Or did Jeff's dad? I've actually never met Jeff's dad. I've met Jeff's mom, but I've never met Jeff.
Who's Jeff even?
Who?
Yep.
Eat. Truman, can you run upstairs quick and just check on Pierce to see if he's doing okay? Sorry, guys. So
I'm gonna leave, but I don't want to
that's fine. Just check on Pierce to make sure he's sleeping. What doesn't make sense for me as an investor, Andrew, just to make sense of this, is that investors are paying $475 a share. That would be in the numerator of this ratio. And just picture a very, very small number being in the denominator. That very, very small number in the denominator, what?
He's okay.
Okay. The very, very small number in the denominator being a very, very small EPS. Why is the EPS so small? Because in the EPS ratio, you've got profits in the numerator, and you've got, let's see here. Just by the way, Andrew, I know Levi knows this already, but I know Yahoo is not very good at many things, but Yahoo Finance is actually very good. Why is it looking up Walmart? Okay, Andrew and Levi, for you to make sense of this. So here's my earnings per share, EPS. It's a very small number. Why is it so small? Because the number in the numerator of that statistic, profits, is very low, and the number in the denominator is the number of shares issued, which is, I think it can tell us here. Yeah, there's almost 1 billion shares that have been issued, 931 million shares that have been issued. Now, that earnings per share, which is very low, 0.39, contributes to this number being very high. So when the earnings per share is low and the share price is high, then the PE ratio will be high, which it is in this case. So why do investors keep buying it is the question.
Maybe they're not looking deeper into the ratios.
Could be, but that'd be a lot of volume to be able to try to explain that. There's actually there's somewhat of a simple answer to this. And if I knew more accounting, Levi, Andrew, aren't you accounting as well? I don't remember. Are you? Let's see. Oh, economics. It's just economics. So it's not. You're not doing accounting in any way, shape, or form. Okay. What if you knew some accounting? We could look at these things in. Okay. Well, even with the basic accounting, in Bloomberg, you'll be able to look at these simple things, and it'll make some sense of how small the profit is. But hey, buddy, come on down. Hey. Hey. Can you go get him at the top of the stairs? Hey, Paris. Come. Okay, gentlemen, here, let me just look at this really quick here. Look at this profit margin here, gentlemen. 1.43%. That's like grocery stores actually make more money. Actually, to prove my point. Sorry, that's my son's tablet in the background, so just live with the sound there. So Kroger, that's the largest grocery store company in the United States. Look at that. Andrew and Levi, look at that. Kroger, the grocery store, makes as much money on selling pickles as Tesla makes on selling cars. Yet,
Oh, I see.
Yet, the PE ratio is 13.66. So that's why, Andrew, just to bring this kind of to a close here, that's why PE ratios and EPSs are so important. Because it's not even the share price that makes, is Tesla overpriced? Yes, in my opinion it is. But it's not overpriced because it's $457 a share. It's overpriced, in my opinion, because the PE ratio is 1,200 something. That's what makes it overpriced. As the other example here, Berkshire Hathaway A is $327,000 a share. Oh, sorry, I keep doing this. They don't have to release their earnings per share because they don't have to release their earnings. They don't have to release their profits because they largely hold. Sorry, this doesn't make any sense here. Let me find something.
All right, Shady, I gotta head out.
Okay, dude. Everything else going well for you, dude?
Yeah.
What are your hours like at the factory? Are they keeping your hours going at the factory?
Well, because of that 2-week lockdown thing, I'm off for 2 weeks. So
that's pretty good.
That. Yeah,
Is
I might
Kristen
try
home
to
for
set up.
2 weeks too, or does she have to go in?
She's essential service because auditors are essential.
Well, at least traffic is not as bad.
Yeah, it isn't. So yeah, I'm just doing this semester and trying to get an internship. Other than that, nothing else new.
Yeah, dude. If Kristen get it for you, dude. I don't know what else to tell you. Hey, do you think, by the way, sorry, Andrew, I'm not trying to distract you on this. Do you think Kristen would be interested in doing the Bloomberg Market Concepts thing? The 8-hour thing?
I I think she's too overwhelmed with the CPA
Okay, never
exam right
mind then.
now. She's
Okay.
doing the CPA exam studying.
When does she take it?
First one's in October.
Okay. Yeah, tell her to focus on that.
Yeah.
Okay, dude, I will see you later then.
I'll let you know if any other questions I think of.
Okay, sounds good. What about you, Andrew? Just before closing here, let me go to the chat here just to see if you have any questions here. Yeah, I mean, it could be. I mean, it could be from their ancillary services. But I was going to say that the other thing that helps Tesla in this case is that Elon Musk actually still owns most of the shares. So if Elon Musk were to dump those shares, um, then I think the market would be. Here's what I'm saying. This is like a dumpster fire waiting to grow bigger. It's a trash can on fire. You don't see trash cans on fire on the news, so I'm not sure why everyone's getting all hot and bothered about investing in Tesla. I just think it's going to end in a lot of heartache, in my opinion. But that's how I think the story ends on this. Okay. When you were looking at everything, I know you were just kind of like looking at everything on the loveliness site. Does everything kind of make sense where everything is? Okay, good. And again, I'll start populating a few more things into there, but you didn't miss anything from last week. So to be able to come in this week, you're basically on par with everyone else now. So I think everything's all good. Okay, sounds good. I will talk to you later then, dude. Okay, see ya.